most crypto guys don't understand. They think that at some point you're going to be able to just trade a house instantaneously. I'm like, you don't understand. Even if they get everything on the blockchain, you probably wouldn't want a house or a piece of property to trade instantaneously, because it's not just you're buying like something that can be traded back and forth and it's easy. It's a bundle of rights. And see, these guys don't understand that it's like there's mineral rights, there's air rights, there's like all kinds, there could be leases, there's, interaction with communities, and, there's like a ton of like moving parts to real estate. So it's not going to be ever as simple as real estate, but it's going to be much better. And the cooler thing about having shares in a fund is you could potentially trade those shares. And I never tell people that you're going to get a bunch of liquidity. But the cool thing is, in the U.S., if it's an accredited investor investment, after a 1-year lockup period, those shares can trade to non-accredited investors also.
Wow. You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
Michael, welcome to the show. How you feeling today?
I'm doing great, Peter. How about yourself? Thank you for inviting me on.
I'm doing very well. I got over the flu, about a day or two out of it. Last week was torture, and so I feel amazing. I feel like $1 million.
Yeah, well, I had trouble recovering, but it was primarily from 2 conferences back to back, with a little bit of alcohol involved.
That'll do it.
And not much sleep. So
Definitely. Well, there's so much to talk about. Let's get right into it. I always like to ask the guests to introduce themselves so I can hear you introduce yourself in your own words. So let's start with that. Michael, who are you?
Sure. I'm Michael Flight. Been in real estate since 1986, commercial real estate. I've been a real estate broker since that amount of time, have never sold a house. We started our company in 1990. Primarily, we deal with shopping centers, value add, but we've done a little bit of everything. We've done workouts for banks. We've done broken condo projects. We've done condo conversions, just a little bit of everything. But our primary focus has always been retail real estate, and primarily redevelopment of shopping centers. So we've done everything from smaller deals, grocery anchored centers, to really heavy lifts. Like we've taken 3 enclosed malls, knocked them down and repositioned them. And most recently, since about 2017, we've also specialized in triple net funds. So they're retail triple net, primarily service type of businesses that won't be Amazoned away.
Wow. That's awesome. I love the retail side of the business for various reasons, and I'm curious what got you into it. When you said you're a broker, is that something you were working on, but you never sold anything? So what brought you into the real estate world? Or
I started off as a commercial real estate broker.
Okay.
And being lazy, I saw that if you were representing a client, a retail client, you could potentially do in Chicago 10 to 20 deals, versus if you were doing office or industrial, you'd end up, knocking on a ton of doors and doing 1 deal. So I'm like, I'll do the retail, because why not just make 1 call and do 10 to 20 deals? So
mostly on the tenant rep side. So for people looking for,
we're representing both, tenants and shopping centers.
Okay.
And then I went to work in 1987 or 88 for a very large syndicator. They had about 270 shopping centers nationwide. And then they ran into financial problems. So in 1990, we started our own company, and have joint ventured with, pension funds, insurance companies, and some pretty big names, hedge funds. And then, like I said, things started changing. We wanted to get some of our own capital. So we kind of shifted around 2016 or 17. It's hard to remember the dates now, so I apologize. Everything kind of runs together after 10 years. But we started shifting towards individual investors because some of the deals that we were doing, everybody says, "Oh, you were doing institutional. Why wouldn't you stay with that?" And I explain, it's like, well, they raise the funds and they deploy the funds over 5 years. And if you're doing a heavy flip, like redevelopment of a shopping center, it's, 4 to 5 year project, and these guys want their money back in 3 years. So it's basically like flipping houses on a giant scale. So,
Sure.
and I don't need the stress in my life anymore. If I do triple net funds, I don't even have to take tenant complaint calls.
Mm.
So
Yeah. Yeah. Wow. So let's you mentioned the different styles of retail, kind of, and I'm sure people can picture, the grocery store tenant, anchor tenant center, and then there's kind of the smaller strip centers where you see like maybe a local pizza shop or nail salon, that kind of thing. And then there's like retail, like you're saying, with single tenant, triple net, or maybe like a smaller where you see like a Dunkin' and a pretzel store or something like that. So just give us a lesson in, what the different options are and some of the, maybe the pros and the cons, because it sounds like you've gravitated over the years where maybe the institutions liked that grocery anchor stuff to now you do more of the triple net, where like you said, you don't have as much or if any maintenance and things like that. So give us a lesson on the different options and pros and
sure.
cons
So
and that kind of thing.
you kind of named the gamut of retail. There's and there's a number of classifications, and sometimes they kind of run together. So it's hard to figure out where one stops and one starts. But on the smaller side, the local strip centers that might have four, maybe up to 8 or 10 that are unanchored, they call those convenience centers. And those, in the past used to be anchored by like a 7-Eleven or something.
Mm.
But 7-Eleven has moved out, and they all want like a freestanding, because they want a gas station and stuff. So the tenants have changed over the years, but that would be called a convenience center. It would also be called unanchored. So it might have some national tenants in it. A lot of them don't have national tenants in it. Sometimes they're good if they're in really good locations. Other times, I really don't like unanchored convenience centers because they're commodities, and you get involved with, people just comparing rents and how much you can give them and all the rest of it. So there's a higher risk. So, and then the next step up would be like a grocery anchored center. And we do prefer the grocery anchored center. And most of the time when we've done a redevelopment, we've knocked down in our grocery anchored centers are a little larger. So they're, 150,000 plus square feet or more, and up to 300,000 square feet. But we prefer those because they're anchored and they have a traffic draw. And so, and even when we're looking at, triple net single tenant leases, we prefer like that they're in a area, because retailers are like lemmings. They want, other retailers around them. They want like nationally known retailers because they know that the traffic is already going to there. And so I can't remember what the movie was, but it was Ray Kroc's biography.
Yeah.
And
Okay.
Ray Kroc figured out that, he couldn't make money doing the franchising because he had a really bad franchise agreement with the McDonald's brothers. So they made all their money on real estate. So it used to be, if you saw a McDonald's someplace, the most heavily studied demographics were where that McDonald's was placed, and then every other fast food tenant
Sure.
would pop up right around them, and then you'd see all kinds of other stuff because McDonald's did all the extensive demographic work for everybody.
Yeah.
So that, and then we move up into specialty centers. So there's community size centers, which might have, Marshalls, Ross, Home Depot, or Home Goods. You have some much larger ones like Home Depot. Costco typically does not lease. Costco typically owns, but they might be a part of, a shopping center just as a parcel. And then you get into enclosed malls. Or you have like specialty centers, which have a lot of mall tenants, but, they call them lifestyle centers. And then the other thing where you can get involved is mixed use. So there's a lot of communities that require you to put retail on the bottom. Most of the time, that retail doesn't do really well unless it's in really dense demographics. So most of the time, the retail that's in the bottom of a mixed use in like a suburban type of a thing, it doesn't do really well because there's not enough traffic going there,
Mhm.
and there's not enough traffic from the apartments above to really support it. So that's kind of the mix. And like I said, single tenant, triple net lease can go any. We primarily do retail, but it could also be industrial.
Mhm.
Some of the most successful single tenant triple net leases are, the major casinos in Las Vegas. Most of those casinos out there are triple net, and managed by the casino company, but owned by a REIT or something.
Gotcha.
So, and the cool thing about casinos is sometimes they pay a percentage rent. So you get
Mm.
a percentage of the gambling revenue.
Mm. Wow. Phew, that would be, I wouldn't mind that, that setup there.
Yeah. And we used to do a lot of percentage rent deals, in the 80s. Most of the time people are not doing percentage rent deals anymore on retail because the banks don't count the percentage rent as, going towards paying off the loan.
Yeah,
So
I feel like that common with malls, and then do you not
it
see
was
this
very common with malls,
outdoor
but I mean,
malls?
we even had, strip centers where there was a Walgreens and Woolworth, and they were percentage rent only. So they'd be paying a very small amount per month. And then at the end of the year, like the Walgreens, one Walgreens that we had was a very good Walgreens. It was doing way above average. And so you get a check like the last day of the year for like $300,000.
Mm, nothing wrong with that. Um, well, talk to me about your preference or some of the pros and cons of the national tenants versus the smaller tenants versus franchisees where it's not corporate run, it's run by the franchisee, that kind of thing. What's your preference? I've heard a lot of mixed reviews. Some people like the smaller mom and pop shops. Is that alignment of value? That's their business. That's what puts food on the table for them. That's their life. And then with the franchisees, they some could be small, some could be big, corporate, obviously. So I'm curious to hear your take on that side of the business.
There's, a lot of syndicators now that are pushing for the convenience store type things, and they say, well, we get a relationship with, people that are in the neighborhood and stuff. And that's all really well and good, but it's much easier to finance a national tenant.
Mm.
And even if it's a national franchise, the bank or the lending institution is looking at who's signing the lease and how much experience they have. So you could have the same franchise and you could have, like, let's say Dunkin' Donuts or McDonald's. And you could have the exact same store, but there might be one guy that has one store and he's just started it. And so he's starting out on his journey, and he might have been an entrepreneur, he might not have. And then you could have some of these franchise groups, like I think Burger King's and Applebee's, they have franchise groups that are actually bigger than the corporate company.
Wow.
So, so it's like, some of the franchisees have, like they're close to credit tenants, and credit tenant means that it's a corporate guarantee, and it's somebody that theoretically is going to be there, and you can get a credit rating on them.
Gotcha. And in the triple net retail space, that's typically what you're dealing with, right?
um the unfortunate thing is you used to find really good credit in tenants, and now most retailers don't have great credit. I
Mm.
mean, and for example, CVS and Walgreens used to be like really top rated credits, and they're moving down, because of some of the issues with online pharmacies and them being disintermediated. Still you can't beat, like an Amazon. So you've got Amazon
Mm.
grocery, and Amazon also owns Whole Foods.
Hmm.
I still think the best credit in the world, even better probably than the U.S. government, and much more responsive than the U.S. government in a national disaster, is Walmart. Um, so, and so those are the options, and you also can get smaller size tenants that are credit tenant, like the big one right now, and I like their coffee, but I don't understand why people are still paying 4 caps for them, is Dutch Brothers out in the West.
Okay.
And those guys, I think they put cocaine in the coffee. Don't quote me on this, but there's like lines around the block for people to get coffee from Dutch Brothers. So,
Wow.
so
I never even heard of it. I'm on the East Coast in Philadelphia. I mean, we have a lot of Dunkins and a lot of Starbucks, but I've never heard of Dutch Brothers.
Yeah, they started, I think, in Oregon, and they worked their way west, and I think they've made it out to Texas. So that's but like I said, that's in McDonald's, you can get it's tough to buy a McDonald's because their cap rates are so low, but the great thing about McDonald's and most of these national tenants is if you've got a triple net lease, you don't need to worry about anything. And the check is it's an ACH deposit directly into your bank account. So, and the only thing you need to do, especially with McDonald's, is, just check to see that the real estate taxes were paid, but everything is typically paid like clockwork. They don't mess around with not, fixing their HVAC. They all have like insurance, and they all have, HVAC contracts and, maintenance contracts for everything.
Well, so let's get back to that, because you'd mentioned a few different names, so I'm hoping you can give a little bit more insight into like your fund and the type of triple nets, because in my mind I go to like around here like a Taco Bell or a Chick-fil-A or an Aspen Dental or one of those dialysis places and things like that. Is that what we're talking about? Or it sounds like it can be a larger too. It could be like an Amazon or something like that.
They could be. Our fund targets, 6 million and below, because once you get up above that, $6 million number, it starts getting way more competitive. And once you get above 10 million to 20 million, it's all institutional, it's all REITs, and it's very tough because, probably as most people understand, even in apartment buildings, if there's a number of offers on a property, it's then a beauty contest to see who is capable of closing. And if you're competing against BlackRock or something, they're naturally going to say, I think these guys are going to close faster than these guys. So we try to keep it below, 5 or 6 million. And what we target with Liberty Fund is MedTail, and things that can't, be done online. We were doing a lot of drugstores. We still do like drugstores because of the way they're positioned, because they typically have great locations. We like dollar stores. We like automotive. Everybody needs to get tires. Even if you got an electric car, you're going to have to get your tires replaced. And the other thing is there's going to be a ton of used cars, even if they stop making, I don't think they're going to stop making gas cars, but there's going to be a ton of used cars for years. So you're still going to need automotive services. And you named some really good ones. The MedTail is like, Aspen Dental or Heartland Dental or, any type of dentist, because they're sticky tenants, especially dentists. They need the visibility, and they don't want to move because they've built up capital in that location and people know where they are. And then, the dialysis places, those are typical national tenants. And a lot of those have really good leases. Some retailers, like the dollar stores, have flat leases. So, for example, Dollar General, we most of the time don't like them because they're cheaply constructed, and a lot of times they'll have a flat lease for 15 years. So their rent doesn't increase for 15 years.
Wow.
Dollar Tree, their rent increases, but it's typically every 5 years.
Okay.
And then a lot of the automotive and medical, you'll get rent bumps every year, which is, what we like. So.
Wow. Very nice. And automotive, I'm assuming is like AutoZone, O'Reilly's, those types of.
No, those would be auto parts, and we do like those, and there's a reason. I mean, the same reason that we like automotive is auto parts stores, they're going to be needed because people are going to be fixing their cars. Let's say everything, the gas, car stopped, next year. There's still going to be 20 to 30 years to 40 years of people fixing cars. So, there's some legs on that. But automotive, we really like the oil change places and tires. And, there's actually one of the leases that we recently did, certain states have you do testing. And there's national chains that run, testing facilities for like, emissions and things like that.
Okay.
And so, this one we did up in Milwaukee, it was owned by an international company. So you got incredible credit. And it was a good location. It was a testing facility. So,
yeah, nice. So talk to me about what you want to see from a lease perspective. Are you looking for like a value add, like something that's maybe running a little, towards the end of the lease, or are you looking to pick up something right after? I'm assuming you're going to get your best pricing, as the lease is coming closer to completion or, coming to extension.
Great thing about this interview, Peter, is you really know your stuff.
I've spent time in commercial brokerage, so I
know, but you
well
know the questions to ask. So that's because most people say, "Oh, wow, it's retail."
And I had a broker that loved triple nets, and I mean, he was always telling me, just you retire on triple nets. So
yeah,
it's one of my goals one of these days.
But we will take cap rate risk on shorter term leases, whereas most of your 1031 buyers are coming out of like multifamily or something, and they're just looking for something with term on it. So they're all looking for like a 10-year lease, a 15-year lease, if they can get it, a 20-year lease. And we don't necessarily care about that if it's a well-located, thing, because we'll take the interest or the cap rate risk and the lease term risk if we know that we can backfill it with another tenant.
Yeah.
So, for example, when we were talking about, Walgreens and CVS, those are typically, main and main intersections at, a stoplight and everything. One of the problems with Walgreens and CVS is they typically have overmarket rents in those locations because they paid just to be there. Sure. And so to backfill them, if you're going to take the risk, you need to like understand that you could be buying a lease that, face value is $25 a foot, and the market could be $15 a foot because your only choice of backfilling it might be with a Dollar Tree, or a Dollar General. So
it's a bigger box, right? It's harder to fill a spot like that, right?
Yes. And a lot of people like buying banks. I, am not we bought a portfolio of banks, maybe 10 or 15 years ago. And, some of them we just scraped and then sold to, CVS developers. But banks are really tough to redevelop because they're just, purpose built. They're really tough to release. Banks are becoming less and less something that, I want to depend on, having just gone through, today, it took me 4 days and 4 trips to the bank to get a wire done, and I'm like, sure. I have 4 other banks that I bank with commercially, and I could do everything online, and you guys, are forcing me to come in to like do it and, ask me what I'm doing with my money. So I
was physically at the bank yesterday, and I hadn't been to this. It was I have a TD Bank, I have a PNC, and I tend to go to PNC more. That's what I have for the business and all, and TD's personal. And I haven't been there in so long. I walked in, everything was different. I'm like sitting at a table. It was such a completely different experience.
The other thing in 2020, because I used to take checks and like deposit them and like get the money back, and like at one point, I went into PNC, and I'm depositing it, and they're like, we won't be able to do this in a month because we won't have cash in the bank. I'm like, well, what's the point of having a bank?
But yeah, it's funny you mentioned that. There's a bank down the street that sat vacant for a long, long time, and they turned it into a bagel place, like a
Right.
breakfast place. And I've been there, but like I wonder, did they keep the vault there? Like, because usually like
Vaults are really tough to get rid of, and that's what I'm saying. I mean, because we've paid. You can't even get like most of the time if you've got like a vacant space and there's stuff in there or the tenant leaves like fixtures and things.
Mhm.
You could get somebody to come in and they'll do it for free because they'll take it and scrap it. But
Mm.
with a vault, it is so tough to get rid of that because the vault is built into the wall. We had one in Gastonia, North Carolina, and it was supposedly the safest bank in the country because the lobby was on the second floor. And you had to go upstairs to get to rob it, and then you had to go back downstairs, and
Sure.
it was who knows, but we couldn't do anything with it because it was just, and so we finally ended up selling it to the redevelopment authority wanted it, and they redeveloped the downtown. So
Mm.
we got lucky on that one because it was completely useless for anything else.
There's a spot down the street. It's in Westchester, which is like a college town, and they have a like a co-working space that was like a rural bank, and they made the vault like a place where you can have like a one-on-one meeting area. It's pretty cool.
Right.
But yeah, it's like, yeah, what the heck else do you do with it? So, God, there's so many things we could talk about there, and I know you're a little pressed on time, and there's some other things I want to cover. But talk to me about like the leases. Are they pure? You want pure triple net where you're really not handling anything at all, or do you occasionally deal with an HVAC?
We do shopping centers, and it really depends on the tenant, and it depends. You're also buying, somebody else's problem a lot of times. So when you're buying, shopping centers, you really need to know, what's in the lease. Because a lot of times, like we're in the process of buying a strip center down in Orlando, Florida, and it was run by a mom and pop guy, and so like some of the leases really don't protect the landlord the way it should, or it was written that if the you know it so the tenants aren't responsible for the insurance. And the way it's written, because he was saying, oh, yeah, if the insurance goes up, then the tenants pay it. I'm like, no, it says if the insurance goes up because of what the tenant is selling or doing,
Okay.
then they have to pay it. But, this is basically a gross lease.
Mhm.
So, and a gross lease means that the tenants aren't paying, all or some of the triple net, because triple net is, you can remember it by Tim, taxes, insurance, and maintenance. And so a single net is the taxes, a double net is taxes and insurance, and a triple net is taxes, insurance, and maintenance. But even in a shopping center, they'll tell you that it's triple net. But the tenants will not maintain the roof. The landlord typically maintains the roof and the structure in a shopping center where there's multiple tenants. In a triple net lease with its single tenant, the tenant typically maintains everything.
Mm. Gotcha. So what does it look like for an investor in a fund like that? I got to think they like, not having to do a lot of maintenance and things like that.
Well, the other
Typically
thing
would
that's
anyway,
really
right?
attractive in some of my, most recent partners, including the ones on the Orlando deal, is they were multifamily syndicators, and they really like it because there's cash flow from the get-go.
Sure.
So, and you could actually set it up where you can do cash flow monthly, because that's, typically with the institutional investors, we've always distributed cash flow monthly and done reporting monthly. So
Mhm.
it's not a big deal. It's unusual for us to do something that, pays quarterly, because it's to us, it's we're already closing the books every month. So it doesn't make a difference whether we distribute monthly or quarterly. So that's one of the things. The other thing is that you get tenant and credit diversification. So with our triple net fund, um, you you're not dependent on one single area. So let's say you've got an apartment building in Tampa, and Tampa gets hit by a hurricane. You've like really screwed on that one. Whereas ours were geographically diversified. And also, let's say you've got an apartment building in Lake Charles, Louisiana. Most of those guys or, tenants are going to be in the oil and gas business. So if something happens to oil and gas, you're going to have problems with vacancy there or tenants paying on time. So with the diversified industries, the diversified credit mix, and the diversified geography, in our triple net fund, it really is a conservative play, but also it's a security play because it's like a bond portfolio. You get all these tenants, plus you get, the tax benefits.
Yeah. Yeah, that's awesome. What does the time frame look like for an investor on something like that?
That which was, it has not been as successful as we hoped it would be. It's been successful from a foreign investor because we did a token offering. So the shares were issued as tokens that can be traded on the blockchain. And so the domestic one, we had trouble convincing people that it wasn't cryptocurrency.
Oh, sure.
Yeah. And it was too hard to do. It's getting much easier for people to onboard. But at the time in 2021, 2022, you couldn't necessarily onboard with an email and certain other things. And so we've been working with a lot of people, and we also, created the Blockchain Real Estate Summit so people could understand more about, how tokenization is going to be the wave of the future, I believe with most syndications.
Yeah, well, this is actually a great transition because that's what I wanted to ask you about. We talked about that a little bit prior to the interview. So talk to me about what you do with blockchain and AI, and where you see the future heading and all that kind of stuff. What do investors, especially accredited investors, passive investors that invest in this type of stuff, what do they need to know?
Well, they need to know that blockchain, it just like we're on, a Zoom call now, and it's all run by TCP/IP, and you don't know what's going on, or you just hit, press a button and email goes through, and that's for, communications. Blockchain is almost instantaneous transfer of value. So, for example, if we use Bitcoin, I could send you a Bitcoin, or I could send you what's called a stable coin. So I could send you a US dollar stable coin, either as USDC, USDT, but I could send that to you and you would get it almost instantaneously. And so I wouldn't have to go through a bank, and I wouldn't have to, like I told you, I was waiting, I had to go into the bank 4 times because they didn't see the money, even though the cashier's check was drawn on their bank.
Yeah.
That doesn't happen with Bitcoin or a stable coin. Or, it's even better than PayPal, because I can send you a PayPal, but PayPal never knows whether the transaction is going to go through, and it could screw up your transaction. But if I send you a Bitcoin, you get the Bitcoin within 10 minutes, and it's guaranteed and it's there.
Wow.
Or if I send you a US dollar stable coin, you get that guaranteed, and I can send that anywhere in the world. So I do have people working for me out of Romania, Bulgaria, the Philippines, and Colombia. And I used to do a lot of, PayPal, but PayPal just, excuse the language, rapes me, on not only the version, but they also charge you a fee to send it. Versus I can now, if they've got a wallet and I've got a wallet, I can just send them the money directly, and it's a lot less, and they get it instantaneously. They don't have to worry about going to a currency exchange or going someplace to pick up their because I used to also do like Western Union and stuff, so they'd have to show up at a store and do that. It's much easier just to send person to person. I could send you, a stable coin. You say, we bet on something right now. And if I lose, I got to send you $20, and you'll have the $20 almost instantaneously.
Yeah. Yeah. Wow. That's, when you say it when you put it that way, you definitely could see that becoming the future, and we're on that path. What do you think the hurdles are outside of just pure education, right? People just...
The hurdles are also, it's much easier with crypto because crypto just trades instantaneously and it doesn't have all the securities regulations around it versus in real estate. You've got securities regulations, and I was just at a crypto conference last week, and I was explaining it's like most crypto guys don't understand. They think that at some point you're going to be able to just trade a house instantaneously. I'm like, you don't understand. Even if they get everything on the blockchain, you probably wouldn't want a house or a piece of property to trade instantaneously because it's not just you're buying like something that can be traded back and forth and it's easy. It's a bundle of rights. And see, these guys don't understand that it's like there's mineral rights, there's air rights, there's like all kinds, there could be leases, there's, interaction with communities, and, there's like a ton of like moving parts to real estate. So it's not going to be ever as simple as real estate, but it's going to be much better. And the cooler thing about having shares in a fund is you could potentially trade those shares. And I never tell people that you're going to get a bunch of liquidity. But the cool thing is in the US, if it's an accredited investment, after a 1-year lockup period, those shares can trade to non-accredited investors also.
Wow.
So, that's legal. The great thing about that is the non-accredited investors see like at least a 1-year, history is not like this completely blind thing. They know what the investment is doing. And I believe was going to help the GPs out because they get relationships with newer investors that they wouldn't normally get into a deal. And then the next thing is that right now those shares are locked up and you can't do a whole lot with them. With the tokens, you can do, inheritance, you can do family planning, you can do asset management, but you can also take those shares at some point and borrow against them. So you could get leverage on your shares. So you could, and then this is what I've been selling a lot of the Bitcoin guys. It's like, why don't you, because they're holding their Bitcoin and they're not going to sell it. And so like, you should just, and we've got a protocol now that they can borrow against their Bitcoin and invest in real estate. And then they can dollar cost, so they get a real cash flow instead of a made up crypto cash flow. And then they can dollar cost average back into Bitcoin.
Yeah. Wow. That certainly seems like the future. How far do you think it's off? Just how long do you think before that becomes the norm and not, what it is now, where it's just kind of the.
I think it's still a ways off, but I could be wrong. This administration in the United States now is way more crypto friendly. The previous administration hated crypto and did everything possible. They actually collapsed, 3 banks in order to prevent, crypto, on ramps. And the other thing is that there's other things that I'm involved with. Like, it doesn't look like it, but I'm also the co-CEO of a fitness app. And this fitness app, it's a thing that runs on the blockchain. So it's fit to earn. So if you do certain things, you earn tokens. And you could also put those tokens up. And I could say, well, I'm going to walk 10,000 steps a day. And you could say, I'm going to walk 10,000 steps a day too. And if we could bet on that, it's kind of a prop bet. It's actually not a bet, but we could just say, and we could be accountability partners. And if I don't do the walking, I would owe you tokens, and then the other thing is that this fitness app, we could create like tribes. So we could have like, 5 guys and people all over the world, because the app is used. I think it's been downloaded in about 24 countries now. We expect by the end of the year, it'll be downloaded in 42 countries. But we could create tribes, and I could if we're going to do running, I could go get some Kenyan guys and say, I need you on my tribe.
Yeah. Wow.
And we could bet and do challenges, against the other thing. And with that company also, the reason why I'm involved with it is because there's actual physical gyms. So there's physical gym franchising, and there's a physical yoga studio franchising. And so the token interacts with them. And then we had the second largest fitness festival last year in Europe. And this year, we're going to have one of the largest fitness festivals in the world. And the tokens and the fitness app. Also, you can, if you have the fitness app, you can get a free ticket into the festival. We're expecting about 35,000 people at that festival. We've got Mr. Olympia there. We've got like High Rocks. We've got like, it's going to be, like I said, 35,000 people. We've got, some of the biggest names in fitness. And, so I'm really excited about that too. And that I wouldn't have even been involved with this had I not decided to go off on an adventure of trying to tokenize shares of real estate.
Yeah. Any resources you could say for somebody that wants to learn more about that and kind of follow the news and what's available, what's out there when it comes to the blockchain and everything you're talking about there?
Well, blockchain and real estate, we have extensive resources for that. So we've got articles, we've got, how to borrow against Bitcoin is the latest article that, we've got, but we've got a report that talks about how does real estate and tokenization work. And we've also have the blockchain real estate podcast, and then like I said, coming up in September 23rd through the 25th this year, we'll be doing our 5th blockchain real estate summit. Gotcha. So we had done 2 in person when we started down in Austin, Texas, and the last 3 have been online. And the really cool part about the blockchain and the crypto community is it's worldwide. So last year, I think we had speakers from 44 different countries. The year before, we had speakers from 50 different countries. Wow. And that's over 3 days. So it's really an international thing.
Gotcha. Very cool. Well, how can people find out more about yourself and the real estate side as well and your funds on that side of the business?
The best place to go is libertyfund.io. That's libertyfund.io. There's all kinds of information on TripleNet, and we have reports on TripleNet. I also have a personal website called michaeljflight.com. It has a TripleNet report on there that you can download. Or we have the Blockchain Real Estate Summit, and they can get the report, on, blockchain real estate. But so they can go to blockchainrealestatesummit.com to get information on blockchain real estate. They can get a lot of information on blockchain, and the TripleNet fund and how it works together at libertyfund.io. Or they could just go to my personal website, michaeljflight.com, and get a TripleNet report.
Cool. Awesome. Well, Michael, this has been a great conversation, jam-packed with information all over the board, too. This was great. I appreciate you being here and appreciate you taking the time talking to me.
Well, I really appreciate the fact that you asked some phenomenal questions and actually asked and answered a lot of the stuff, so I didn't have to do all the work. But no, it really, has been a great, experience, and I really appreciate it.
Awesome. Well, thank you so much, Michael.
Thank you.